So, the moment of truth has arrived. Another year has passed and we have to look into our investments and see how we did, the mistakes that we made, and learn from it and always improve. But before we get into numbers, make sure to subscribe to our channel and hit the notification button for more videos about how to improve your finance and mindset.
People always ask us, how do we choose our investments? How do we know if they will offer good returns? What do we invest in? Yada, yada, yada. And the reality is that there's so much to consider and to know before you put money into anything that we could make a whole video playlist about that.
That's right.
But for now, let's take a look at what we have invested in the past year. As you can see, our investments are split into two categories: stock market and cryptocurrency. And the reason why we invest in these two only is, well, because we don't have enough capital to invest in real estate or mortgages.
Difficult.
Nah, but really, we would love to invest in these things, and we will in the future, but because they require a larger amount of money, they require much more planning. So for now, we invest in the stock market through our TFSA and RSP accounts and in cryptocurrency. So now that a year has passed, what was our return in these two categories? Okay, now let's talk about it, and let's start with stocks. As you can see, we've earned a total of 26% since we started, which was around 3 years ago. But only this year we made 20%, which means we only earned 6% in our first couple of years. Of course, we could have done way better, but 20% return in 1 year in the stock market is not bad, considering that it was pretty much our first year as serious investors. Now, about crypto. Holy, I have to admit, we just started investing this year and we're still learning, and the learning curve, it's a little bit more complicated because of all of the technology involved. But 53% in our first year, I don't freaking care. We're happy as And yes, there were many ways that we could have made more than 50% return. But if we can get a 50% return every year, I'm happy. Look, 50% return on a $10,000 investment for 10 years is more than $570,000. And that's without putting any extra cent towards your investment.
In general, I would say that we were a little bit conservative in our investments this year. Most of the times, thinking 10 times before putting our money into something new. And honestly, sometimes we were just observing the market and not taking any action. And that, my friends, is one of the takeaways. The observer might not lose money, but might not make money as well. One big example of this year was the Bitcoin drop. There was 80,000 Canadian dollars and it went all the way down to 40,000 Canadian dollars. Did I fear? No, because I knew that it would get back eventually. Did I sell my Bitcoins? No. But did I buy more Bitcoins when it was $40,000? No. And that was a 2-click opportunity that passed, and we missed the chance to make 100% return in what? 3-4 months? So if you're hesitant or thinking that you're not ready to start investing, don't listen to your mind. Just do it. Start small, but take action. Because at the end, what is $100? You will make this money again in case you lose it, but next time you will be smarter. And talking about losing, that brings us to our second takeaway. Take risk. No risk, no money, no return. The bigger the risk, the higher the return. Are you afraid to buy certain crypto? Just put $20. Maybe this $20 will be worth $1,000 in 1 month. That's 5,000% return. But if you lose it, you will lose only $20, 100%. Did you notice the percentage difference? I will repeat. If you win, you will make 5,000% return. If you lose, you're gonna lose 100% return. 5,000, 100. You want an example? Let's get Shiba Crypto. There's this guy that invested $3,000 in this coin 1 year ago, and right now it's worth more than $5 billion. Yes, he could have lost the $3,000, but he took the risk and now he made more than $5 billion in just 1 year. And our last takeaway, invest your knowledge as much as you invest your money. Taking action and risks will be far easier once you understand your investments, the stock market, crypto. So the more knowledge, the less riskier it will be. One example is to understand that some businesses are cyclical. That means that it goes up and down throughout the year. And that happens with the car industry. Once you understand this and get the cycle, you can buy low and sell high.
We're not saying you have to go out there and spend all of your money trying to find the next gem. Before that, you have to build a foundation, which, by the way, we have a video about that. And then after that, you only invest when you can afford to lose. So please don't go bananas.
So that's it for today's video, guys. And if you also want 50% return on your investments, subscribe to our channel and activate the notifications. And see you next time.